Recording in progress.
Good morning, Buta. We only have 3 members of the committee.
Good morning, sir. It's 4 now, only 4 members.
Do we have 4?
Yes.
I see
Mr.
Honorable
George,
Mr.
Maswale and Mr. Skosan. And plus you, it's 4 only.
Yes, Kosan. Mhloni just Kosan.
Morning, Chair. I am here.
Comrade Pum, how are you?
No, I'm good, Chair. I'm good, thanks. Yourself?
How fonele unokusimani ukuthi asicorrect lapha?
No, I'll do so right away.
I check no Zanele no Mabiletsa ukuthi because we are dealing with a very critical being here.
Thank you, Chair.
I'm here.
Mabiletsa, where are you? Where are you hiding?
I'm in a flight.
You are coming together.
Yes.
Can the flight wait that we start the meeting? Then you will fly. How many are we? De Villiers is in the platform. Villiers is here. Are we not correct?
I didn't see Mr. De Villiers. If he's on the platform, then we have a quorum.
De Villiers, are you there? I saw De Villiers somewhere.
I think you saw Dr. George. Oh, yes, there's Mr. De Villiers. We are now collating, sir.
Yes. Good morning, Chairperson. I am present. I am just on my way to Parliament, and I'll be joining the plenary physically at 10 o'clock. So can I offer my apologies that I will have to leave the meeting by 10 o'clock. Thank you.
Okay. So you are driving from Strand?
Yes, exactly, Chairperson. I'm on the N2 sitting in the traffic.
Okay. No. See you later, De Villiers. I think we are correcting the. Is it not so?
Yes, sir, we are now.
Today we have got a very tight parliamentary schedule. Let's start because there are those who must be part of the debate of 20 human rights. And the intelligence bill, and then the president. So, it's honorable members, you are all welcome, and welcome National Treasury, SARS, and other entities of that report to National Treasury. Welcome the media, our support teams of in all their categories from Parliament. You are all welcome. We are proceeding with processing the Pension Funds Amendment Bill. We adjourned last week where we received inputs from the stakeholders today. So we are proceeding to get the response from National Treasury. The meeting is officially open. Do we have apologies?
I didn't receive any apologies, sir.
Okay, except Honorable de Villiers, who indicated that at 10 o'clock he has to attend to another engagement.
Yes, sir.
Okay. Let's proceed, and then we get a response from National Treasury to the submissions that were received from stakeholders. The issue that was raised very sharply, amongst other issues, was the compatibility of this legislation with the Divorce Act. I remember it's a matter that we had to deal with for quite some time last week. And Treasury will also have to address those issues that they submitted to the committee, so that we have to consider them before we move to the next stage of adopting the bill and then send it to the National Assembly. Over to you, Treasury. Address all those issues by stakeholders and the issues that you brought after for the committee to consider. Thank you. Over to you.
Thank you very much, Chair. Good morning, Honourable Chair, Honourable members. Yes, we've got a presentation where we will try and address all of those points in the slides. My colleagues in Shanta or Nomalizo can help with those. Nomalizo, would you like to go ahead, please?
Good morning, Chair, and good morning, members. Thank you, Chris. I think in terms of our arrangement as the team, we had agreed that Alvina would lead with presenting the response, and I will come in where I am required. Thanks. So Alvina can go ahead.
Thanks, Chris. Thanks, Nomalizo. Good morning, Chair and honorable members. Can I kindly have sharing right so I can share my slides? I'm not able to share my slides at the moment. If I can be assisted with that, thank you.
I have made you co-host.
Sorry, it still says host disabled participant screen sharing.
Yeah, I'm also not able to share. Sorry, Albina, I'm trying. Normaliza, can you share on your side? I see you are co-host as well.
Apologies for the glitch. Nomalizo, are you able to share the slide? Thank you.
Yes, I am.
Okay. Can we have them in slide mode? Thank you. Good morning again, honorable members. And thank you, Chair, for this opportunity, and all participants, thank you for being here. So we'll be taking you through responses. Sorry, go to the first slide. That's okay. Second slide. Yeah, we'll be taking you through the comments that we have received. We received comments from ERFA and ASISA, so we'll be responding to those. And our response covers the new definition of pension interest, the application clause between the Divorce Act and the Pension Funds Amendment Bill, Section 19.5 that deals with loans and guarantees, largely 37 Cap D related deductions. We also got clarity requests for corrections in drafting. We also have in the slides comments from Treasury that cover proposed amendments to 37 Cap A of the Pension Funds Act, proposed amendments to the public sector laws to provide for the two-part system for inclusion that are currently included in the Pension Funds Amendment Bill. These are GEP law amendments, Post and Telecoms Related Matters Act amendment, and the Transnet Pension Fund amendment. Next slide. Thank you. So we'll start with general comments that we received. There's a request that non-two-part related clauses not be introduced in the bill. An example is what we'll also cover in the comments in the responses going further on, which is an inclusion of payment of divorce awards from pension income that is being received by pensioners. Currently, divorce settlements are taken from a pensioner's capital value. So this proposed amendment, this change will be removed. We will revert to the current wording that is in the Pension Funds Act, which states that divorce order settlement for pensioners should be from a pensioner's capital value and not their monthly or annual pension. The chair has spoken to this contradictions between the Divorce Act and the Pension Funds Amendment Bill, because both the PFA Bill and the Divorce Act contain prevailing provisions in the definition of pension interest. Clarity is therefore sought on which law will prevail or which law funds will apply. So we do accept this. We will have an application clause inserted in the bill, which provides that in an event of a conflict between the Divorce Act and the Pension Funds Act, the Pension Funds Act will prevail. This is in terms of the general application and interpretation of statutes, where it is stated that provisions of the latter act prevail. Another general comment that we have received is that the provisions of 37 Cap D largely exclude the retirement component. So comment is that the drafting has an implication of excluding the retirement component from loan and guarantee related deductions in terms of 37D by only allowing the savings component to cover the repayment of loan and guarantees before retirement, where there is no vested component. Excuse me. This is not the intention, because the Revenue Laws Amendment Bill already states that 37D related deductions will be proportionally deducted from all pots or components that a member has. We will therefore provide further clarity in the drafting, where it seems that we only allow deduction from the saving component. Related to this, we will remove reference to prescribed by regulation in the drafting, because the Financial Sector Conduct Authority is currently empowered to make conduct standards. for fund-related matters. Another general comment that we received, that we provide special protection to the savings component where the bill contains provisions that prohibit access to the savings component if a fund is aware of a pending deduction that might not be met should a member be allowed to take a savings withdrawal benefit. Concern is therefore that a similar protection is not there. For example, a vested component where the fund would have to get an interdict to stop a member from tapping into the vested component if there is a pending order against the member. It has been requested, therefore, that similar to funds getting an interdict to stop a member from accessing their benefits, an interdict should also be required to stop a member from accessing the savings component if they have any pending claims. Our comment is that if a member leaves the services of the employer, a deduction will happen. Prior to exiting the services of the employer or leaving the fund, a member only has access to the savings component. We are only restricting access to this accessible pot only if accessing a savings component will result in insufficient amounts remaining to settle any pending order. We also got request for confirmation on whether including public sector pension laws amendments in the Pension Funds Act will not result in delays of the two-pot system. As Treasury, we do not envisage any delay. However, the legislative process is not in our hands, and we are hopeful that Parliament is also adamant to get this two-pot system up and running as soon as possible. Clarity has been requested in the comments on the terms members' share of the value of the fund, where this term is not currently being defined in the bill. We do accept this comment. We will make amendments in the bill to refer to terms that are used in the PFA, which is individual account or minimum individual reserve, where the case may be. There's also a request for clarity as to which date the new definition of pension interest, from which date the new definition of pension interest would apply. This is noted. The law, which is the Pension Funds Amendment Bill, will come into effect on a date to be determined by the President by proclamation in the Gazette. And by agreement currently, we have the effective date for implementation of the two-pot system. We also got requests for removal of reference to provisos in item 6 cap B of the second schedule of the Income Tax Act. We do note this proposal, however, we will retain this reference for purposes of certainty. Another comment proposed that the definitions of valuator and vested component be separate clauses and not be substitutions in the bill. We do note this comment, however, we take this as an acceptable drafting style in terms of the drafting conventions, so we will retain the drafting as it is. We've also been made aware of an incorrect reference to the income tax number in the definition of vested component. We are aware and we accept, however, the Income Tax Act will be defined, and as a result, reference to Act numbers will fall away. We have a newly inserted clause in section 14 cap B, which is 2B item 3. And the comment is that this section does not provide for pensionable service to be increased, for example, in cases of allocation of surpluses, but it only provides for the pensionable service to be decreased. Meanwhile, the definition of a defined contribution fund does both increasing and decreasing the benefit or the contributions of the member. Our response is that a withdrawal, which we are trying to account for in section 14 cap B, 2B item 3, is a withdrawal that will only result in there being a deduction from the retirement savings. So it can never be an increase, whether it's a defined benefit or defined contribution. So the amendment correctly reflects this, because the bill allows for the reduction for section 14 cap B 2A item 2. So we are also including a reduction in 14B 2A item 3. Similar to what we have, one is for defined benefits, the other one is for defined contributions. Clarity is also requested on whether 65%, which is a limit for loans and guarantees that a member can have against their pension benefit, whether this would be net after tax or it would be a gross value. And also if this provision, the 65% limit, will apply from 3 January 2023, which is the effective date for Regulation 28 as amended, or the effective date of 1 September for the two-pot system, because this is contained in the two-pot system related changes. So the intention is to apply the reduced percentage of fair value at the current tax treatment, which is net of income tax. However, the reduced percentage will not be applied retrospectively. It is proposed that the words "in the interest," in the member's interest, in the savings, retirement, and vested components should not be included in section 19.5C, as these components are already captured in the determination of the member's individual account or minimum individual reserve. The view is that duplication might result in confusion. However, we note the comment, we will retain the wording as it is. The intention is to emphasize that the application of this threshold must be across all components. We got a proposal that paragraph 19.5D be deleted, as it appears to restrict the value of a loan or guarantee provided by the employer to the member, which is undesirable. We will not be deleting this section. The discretion by the fund to increase the percentage related to hypothecated immovable property to 100% has been removed, so that section in 19.5D is still necessary. With the definition of pension interest inserted in the Pension Funds Amendment Bill, it is proposed that the current sections 19 cap D, 5 and 6 be deleted. Subsection 5 refers to retirement annuity calculation, while subsection 6 deals with the calculation of pension interest in preservation funds, and both sections are applied currently despite the provisions of the Divorce Act. So in our amendments, we have consolidated 5 and 6. So if subsection 1E is read with 1D, you will notice that it replaces the deleted subsection 6. This is as a result of the new definition of pension interest. We also got a request that Treasury releases drafts of regulations as proposed in the bill, where in various clauses we refer to requirements prescribed by regulation. So this reference will be deleted because if a need arises for regulations to be prescribed, the minister can issue regulations in terms of the Act. Also, the Financial Sector Conduct Authority is empowered to issue conduct standards. Next slide. Okay, there's a comment that the reference to the amount of the benefit to which a member becomes entitled in terms of the rules of the fund in 37 Cap D 1A item 2AA fails to consider circumstances where a member dies and has a beneficiary. This section caters for deductions related to housing loans. It excludes the retirement component. The proposal to include beneficiary in the subsection is accepted. The opening words of 37 Cap D 1 will be changed to ensure that deductions are applied proportionally across all components as envisaged in the Income Tax Act. 37D also is seen to limit the deduction of a home loan to the amount the member would have received on termination of membership of the fund. Clarity is also requested that a deduction would be made on termination other than death or retirement. This is the current wording in the Pension Funds Act, and we are not introducing anything new. The provision regulates a deduction by the fund in the case of a default where the membership in the fund is not terminated. In the event of termination by membership, by resignation or death, the amount due as a result of the default will become due and deductible. This has come out in a number of comments that the restriction of accessing the savings component in the case of fund-provided home loans or guarantees seems to only refer to employer-provided home loans or guarantees. We do agree. Our proposal is to include 19.5 loans. Sorry, we agree. Section 19.5 refers to loans and guarantees provided by the fund. So the Pension Funds Act currently does not have empowering provisions for employer-provided loans. Our proposal is to amend 19.5 to provide an empowering provision for employer-provided loans. Because when you go to 19.5, it only deals with loans provided by the fund. You go to 37D, a fund can make deductions for employer-provided loans, meaning 19.5 and 37 Cap D are not properly aligned. You can make a deduction for a loan which is not provided for in 19.5. So a drafting error, repetition of funds at the end of the opening paragraph, we will make that correction. There's a proposal that reference to or the date on which the member ceases to be a member of the fund should be replaced with or the date on which the member's employment with a participating employer in a retirement fund is terminated. Also proposed is the requirements prescribed by regulation be deleted. We do agree with the deletion. We also do agree with replacing the words with that have been proposed as or the date on which the member's employment with a participating employer in a retirement fund is terminated. Reference to an amount not exceeding the amount which in terms of the Income Tax Act may be taken by a member or beneficiary as a lump sum as defined in the second schedule has the effect that no deduction can be made from the retirement component. We agree, and in this section we will delete the bottom flash which states to an amount not exceeding the amount which in terms of the income tax may be taken by a member or beneficiary, so that bottom phrase will be deleted. Using the phrase any benefit payable in respect of a member in 37D1B2 implies that the retirement component, again, will be excluded from damages payable to the employer. Again, here we will clarify the intention is that the retirement component is taken into account when deductions related to 37D are made. So the opening words of 37D will cater for the inclusion of all components as per the Income Tax Act provisions. Next slide. Okay, clarity is requested that a loan or guarantee is in terms of Section 19.5 and not any other loan or guarantee that might have been granted by the employer to the member. Further, protection in the bill is not extended to loans and guarantees provided by the fund. So this is the disjuncture I was talking about, where 19.5 deals with loans and guarantees granted by the fund, not the employer. You go to 37D, where a fund is permitted to make deductions for any claims. Loans granted by the employer can be deducted, including loans provided by the fund. However, loans provided by the fund are allowed in terms of Section 19.5. So would you accept the comment that loans and guarantees referred to in 37D should be in accordance with 19.5? However, the Pension Funds Act currently does not have empowering provisions for employer loans and guarantees, as Section 19.5 only deals with loans and guarantees provided by the fund. Request is also made that the bill clarify that a member who has a home loan or surety in place should not be permitted to access the savings component without the consent of the party that provided the loan or surety. We do not agree with this comment. The request for a member to seek the creditor's consent would place an extra burden on the member in a system where we are trying to provide income relief to financially distressed members. So the bill only provides that a withdrawal should not be permitted if it will not deplete the savings component. So the onus will be on the fund to ensure that the savings withdrawal will not deplete any savings component for the member to settle the claim that they have. Again, it is requested that the bill should make provision for a member to not access the savings component when the fund is aware of a pending employer claim. Yes, the bill does provide for the suspension of a savings withdrawal benefit where the employer has obtained judgment, even though not yet executed. We will amend the bill further to include a written admission of liability, even though that admission of liability has not yet been executed. Commentators requested clarity that where a member has admitted liability but refuses to retire or terminate their membership, what should the fund do? In our understanding, where there is a written admission of liability, that is sufficient for the fund to make a deduction on the date on which the member's employment with the participating employer in a retirement fund is terminated. So the member has left the employment and refuses to retire or terminate their membership in the fund. The written admission of liability grants the fund the right to make the deduction. There is concern that the 12 months period is too short to withhold a member's benefit. This is savings withdrawal benefit, because it takes longer for criminal and civil matters to be finalized. It is proposed that a longer period be considered. We do note this challenge. However, our view is that an extended period may unfairly prevent the member from accessing the withdrawal benefit. So these are drafting errors which we accept, and we will accordingly change in the coming bill. We go to the next slide. Okay, the first two are also drafting errors which we accept and will correct. And the last comment is that the deduction of divorce and maintenance amounts from an infant pensioners should be deleted from the bill for further consideration when coffee is considered. We do not agree with this comment because the provision is already there in 37D1D. The only correction that we'll be making here is to retain deduction from a pensioner's capital value and not a pensioner's income stream. It is submitted that the new section 37 cap D 1 cap B is not necessary and should be deleted, as this is already contemplated in the definition of members' minimum individual reserve and members' individual account. We do accept the deletion. 37D 1C, that is a drafting error, we will correct. The last comment on this slide, a proposal is made that a fund should only refuse a savings withdrawal benefit where the loan or guarantee in the case of a pending divorce proceedings where a court order has been obtained. Another commentator requested that written notification with legal proof that divorce proceedings have been instituted be used to withhold a savings withdrawal benefit. We do accept the comment. We'll amend the bill to refer to a written notification with proof that divorce proceedings have been instituted, or an application has been made, proof that an application has been made for a court order in respect of the division of assets of marriage. Next slide. It is submitted that the payment of future maintenance orders is not a change related to the two-pot system. Requiring funds to make payments annually in advance is seen as a challenge. It is proposed that if the provision is considered for inclusion now, the definition of beneficiary fund in the Pension Funds Act should be amended to take account of future maintenance allocations. Our view is that future maintenance court orders are deductions that should be applied across all components, and it's something that funds are already doing. Clarity is also sought on the proposed change of submitting divorce orders to the fund from the non-member spouse to the changes from non-member spouse to the registrar of the court. So we do accept this. We will change it to retain the current status quo, which is the divorce order is submitted by the non-member spouse. So the last comment is a drafting correction in terms of the referencing. We will correct that. Clarity is requested on that the non-member spouse is entitled to fund returns, whether our intention is to change that for the non-member spouse to be entitled to fund returns from the date of the divorce order. Currently, the Act says fund returns accrue from the date of deduction. We do accept. We will make the correction to retain the current status, which is that fund returns to the non-member spouse accrue from the date of deduction. Chair, we also have a number of comments from Treasury. The first comment, we are proposing to amend 37 Cap A of the Pension Funds Act. So this proposal is to take account of the reference to the Tax Administration Act, which clarifies deductions of IT 88 tax against the benefit of a member. We are also proposing amendments to public sector laws to provide for the two-pot system. So the public sector laws will form part of the pension funds amendment bill. So this is for the GPF, Transnet, GPF, Transnet and Post and Telecommunications Acts, which we are seeking to amend to align with deductions of the Pension Funds Act, because these laws already mirror the Pension Funds Act. So in addition to these funds amending their rules, they also need to amend their laws to take account of deductions properly. Other amendments that we are seeking, which are not related to the two-pot system, it's 19.5. As I've mentioned, there's currently a disjuncture between section 19.5 and 37 Cap D. 19.5 allows for fund loans and guarantees, which can be deducted in 37 Cap D. 37 Cap D allows deductions from employers provided loans, but those are not provided for in 19.5. I think there's another comment that we have, Namalizo. I'll quickly go to my notes, sorry. Yeah, so another last comment from our side is to include an application clause on the definition of pension interest in the Pension Funds Act to make sure that the contradiction between the Divorce Act and the Pension Funds Act is properly catered for. Thank you, Chair.
Thank you. Are you done from the side of Treasury?
Yes, I am done, sir. Not sure if Chris or Normalizo have anything to add before we hand back to you. Thank you.
No, thank you, Albina. Thank you, Chair.
Before you step down, when you concluded, you spoke about a definition that has to be inserted in the bill. Is it there in your slide? I didn't see it because the last slide talks about GPF, telecommunications, and Transnet.
If I may take that, Chair.
Yeah, thanks.
Thanks, Chair. I think in the last slide, we have listed the three public sector pension laws amendments we are proposing, but we have also listed the PFA to the extent that we are saying we request that in the PFA, the current amendment bill, that the application clause be included in it. We are aware that it comes twofold because it came first as a result of a request of a comment last week on the alignment of the two, the divorce and the PFA. And our response to that is the inclusion of this application clause. So we are asking formally for the committee to allow us to include it in the current bill in front of the committee, and also as a response to the comment that was made for the alignment of the two definitions in the Divorce Act and in this bill. Thanks, Chair.
Okay, thanks. Let's proceed to item 3. Deliberations by the committee members. Honorable members, over to you. Clarity, seeking questions and or comments. It looks like there are no hands that I see on the platform. If we agree with what Treasury has presented, it's fine, so that we can move to the next item of stakeholders engaging. Any member who would like to make a comment or ask a question? Who's Dr. Phillips? Wait a bit, we'll have a time for stakeholders to ask questions. For now is the time for members. Stakeholders will come after. Advocate Jenkins, are you still here? Or you have left because I think we have an apology that we must write somewhere. Is Advocate Jenkins still here?
He is on the platform, Chairperson.
Or maybe he might have switched on his phone to be in this platform while physically is attending to another meeting. Okay. Yeah, lastly, before I go to stakeholders, normally you said we must have an application clause. So how do we insert it now towards a clause by clause? Where in the bill should that come, the application clause? Is it a resolution or it will be a specific clause, and where about in the bill should we insert that clause? Can you simplify so that when we go to the next stage of the bill, we are clear of what we're dealing with? I understand the GPF, Transnet, and post and telecommunications, which were left out, which have to be included, and there has to be subsequent changes to the rules and other related matters. The application clause, what is it that are you talking about, and how do you want us to integrate it in the final bill?
Thank you, sir. The proposal is for an insertion of a new section, which will be Section 1 Cap A in the Pension Funds Act, which will have a heading which will say application to this act, and it will then indicate that in an event of a conflict between the Divorce Act and the Pension Funds Act, the Pension Funds Act will prevail. So that would be the clause that we are proposing, so to provide for the PFA to override the Divorce Act in respect of the pension interest definition. And we have mirrored that in the proposed amendments for inclusion in the public sector funds, similarly across all three, where we have also inserted the same application clause under a new insertion or new section rather, which will be Section 1 Cap A. Thank you, Chair.
Okay. Discuss that with the parliamentary legal team so that when we deal with clause by clause, all those issues that you are proposing here should have been inserted in the bill. Okay, let's move to comments by stakeholders. Comrade Matthew from there to be assessor, and then IRF. Yes. Yeah. Comrade Matthew, over to you.
Good morning, Chair, and good morning to members. Thanks for giving us just a few minutes to respond. I think, Chair, in a nutshell, we're happy with the proposed amendments and the redrafting by Treasury. I think we agree with the comments, both in response to those from ASISA and IRFA and also from ourselves. So I think we're comfortable with all of their proposals. For example, the issue of loans, etc., the issue of monies owed, and so forth. We think they make sense, and we're happy with them. And then, Chair, we only had that one proposed type of amendment, which was for the three pension funds, which have separate legislation. So the GPF, Transnet, and the telecommunication pension funds. And I think we're happy that, as per the agreement and that common understanding, I think amongst all of us, that those will now be included. So I think we're comfortable with that. So in essence, Chair, we're very happy. We support the proposed amendments, and I think we're just keen to encourage the committee to support them, and of course for the committee, for the National Assembly to pass it as soon as possible. Also, just to give space for the NCP, likewise, to do its work. So I think, Chair, from our side, we're happy with everything. Thanks, Chair.
Thank you very much, Comrade Matthew, for your input. Who's next? Can see properly. Zuti, who comes next? Is it ASISA? Yeah. ASISA, over to you.
Good morning. Thank you very much. And thank you for Treasury for the feedback on the comments. It seems as if the main things will be sorted for our members, and we're happy to see that. We just want to have an opportunity to look at the ultimate drafting to see whether it has been properly addressed in the legal words. Thank you, Chair.
Thanks, ASISA. IRFA.
Good morning, Chair. I represent the IRFA. We are happy with all the proposed changes that National Treasury has put into the document, and we want to thank National Treasury for engaging with us through this process. Like ASISA said, we would like to see the final wording, but we think that we are happy with the changes thus far, and we need to actually see this build to finality so that we can actually move ahead with the next steps for us to implement this two-part system. So thank you for the opportunity.
Thanks, IRFA. Tebogo and your team, we are supposed to table the report on the 27th, according to the amended program of Parliament. So it means this Friday we'll have to meet so that it can be 80 seat for the weekend. Is it so? Secretariat and the whole support team of SCOF. The report is supposed to be taken to the assembly on the 27th. I think it's next week. Is it Wednesday? And we must have enough time for ATC. So,
do you mean the legacy report, sir?
No, we are talking about the pension fund amendment bill, Sister.
Okay.
We are discussing now.
Yes, okay.
Are we not supposed to have a meeting on Friday to go clause by clause and adopt the report? Because the report must be tabled on Wednesday in the National Assembly. So we must live here with the same understanding that we call a special meeting to deal with the report so that we comply with the parliamentary program. Are we able to do so on Friday? Can we agree?
Can I get back to you on that one, sir? Because as you say, the program was amended.
Yeah, I was sent
but
the program.
I think our clause by clause is on Friday, Tuesday.
It won't work. We must have the meeting. If the speaker sent me the program that she wants the report to be tabled on Wednesday, and it must be 80 seat, so it means we must work overtime, isn't it?
Yes. Can we discuss offline, sir? Because now I'm not able to access the program whilst hosting the meeting, so that I can give you
the parliamentary program.
Yes.
That's what I'm telling you now. I have it in front of me. It's next week on the 27th. You don't have the parliamentary program?
I'm saying I'm not able to access it now whilst hosting the meeting, hence I'm requesting that I talk to you after the meeting.
No, we must live here with a clear understanding.
Oh, okay, all right.
I'm telling you that we are supposed to table the report on the 27th. Where is I think I have the program somewhere here. Yeah. The 28th is the deputy president. Yeah. The 27th will be a Wednesday. We'll start with the questions to the economic cluster at 1500. After the questions to the economic cluster is the consideration of the report of the Standing Committee on Finance on Pension Funds Amendment Bill B3 2024, 80 seat March. And then second reading, Pension Funds Amendment Bill B3 2024. Yeah, so that's what is coming up from the office of the Speaker. So can we have the meeting this Friday? Can you please schedule the meeting?
Okay,
so that we comply with the parliamentary program. Thanks very much, honorable members, stakeholders, National Treasury, SARS, the media, and everybody who's in attendance, our support team of the Standing Committee. Let's meet again this coming Friday. Treasury, you have to be there. Please work around the clock with the parliamentary legal team to make sure that the revised bill complies with all the requirements of law drafting. We don't want to miss any other section now I mean, you remember some of the key issues that you are bringing now towards the end were not there at the beginning. So please, let's make sure that we do things in time, and we should make sure that we also deal with the technical stuff and all the issues that you are raising, the application clause and other clauses. Let's make sure that between today and when, today is what is Tuesday, the latest tomorrow late, the publication, the new revised bill should be out even to members, so that when we meet on Friday, we should have gone through the revised bill and also even to stakeholders. We don't want to do things behind the veil of secrecy. So work with the legal team of Parliament and make sure that we do the right things. Thanks very much. Let's meet again on Friday morning. The meeting is adjourned.
Thank you, Chair.
Thank you, Chair.
It goes. Thanks.
Thank you, Chair.
And goes.
Recording stopped. Recording in progress. Recording stopped.